Welcome back, ladies and gentlemen. Thank you all for joining me today. I really wanted to take a look at Meta platforms. What did Mark Zuckerberg say? What did Susan Lee say? Kind of dive into the Q2 2023 earnings, and I figured let's do this here on the channel, here in the YouTubes. So if you like this kind of stuff, if you like value investing, that's what we do here on the channel. We talk about value investors, we talk about things that we've learned, things about that we've made mistakes on, and other stuff like that. So if that's something you're interested in, make sure to subscribe down below. If you like Meta platforms or don't like Meta platforms, you might find this interesting, at least for your own personal knowledge. So hopefully I add to this discussion around this company, but I am a long-term shareholder. I've held it for a couple of years now, and I hope to hold it a little bit longer. But let's talk about what we're going to do with the company. Let's talk about where we're at with this company and what we want to do. This company is currently 15% of my portfolios, and we're going to talk about that a little bit more later on in the video. But with that being said, let's dive over into 2023 and what we thought and what we don't think about this company. So again, 2023 Q2 is what we're looking at, which this company in general just looks a lot different from last year. So let's kind of dive right into that and see where we're at. So again, comparing financials from this quarter to last quarter, and kind of where we're at. If you look at the 10Q itself, it doesn't compare to March, it compares to December, but I'm like, I want to know what happened between the last quarter and this quarter. I don't really care so much as far as the balance sheet changes go, what happened. For the other stuff, I left it. Just showed 2022's numbers versus now. So as far as things go, from what I've seen, everything is pretty much relatively flat. Nothing crazy as far as changes go. You can see at the top line, again, marketable securities and things like that, and accounts receivable all kind of stayed the same. But this big jump in cash and cash equivalents actually came because they issued more debt. So as far as the total assets go, nothing crazy there, give or take a $16 billion, $15 billion jump. A lot of that has to do with the money that they got from the long-term debt that they issued. So kind of jumping down to this long-term debt, you can see the last quarter they had 9.9 billion. Now it's 18 billion. And obviously some of it gets kind of put in the current section as far as the current liabilities go. If any of it is due within the next year, which I don't think the bonds in this case were. But again, they added $9 billion worth of bonds, and you'll see it on the cash flow statement what cash came in from that. As far as anything else on the balance sheet, there's nothing else that's really notable. Nothing else as far as crazy changes. They did accrue some more expenses that you can see here. So it went from 19 to 24 billion. And we'll talk about that here in a second. Going over the net income statement, the revenue jumped to 31.99 billion, an increase of 11% year over year. If the currency stayed constant, it would have been 12%. So again, a tiny bit of headwind, but not nearly as much as happened over the last year between 21 and 22. So you can see here though, top line revenue growth pretty solid as far as the 6 months go. Pretty good as well. You can see a jump slightly in the costs and expenses. So the total cost and expenses for the quarter was $22 billion. And not a crazy jump again. 10% isn't so much a crazy jump when you have 11% growth on the revenue side. A lot of it has to do mostly with just R&D and things that they're spending on, as well as, again, they accrued an expense. So part of that does kind of come into this. But as far as revenue goes and net income growth, so you can see 7.7 at the bottom line versus 6.6 last year. Then again, 13.498 for the 6 months and 14 last year. Again, the cost and total expenses, including a $1.87 billion legal expense because they got fined. And then the CapEx for the year, or CapEx, was around 6.35 billion. But you'll see later on, they did lower their CapEx slightly for the year. So again, nothing crazy happened. It was a pretty relatively good quarter, all things considered. I think a lot of the market was happy about the revenue uptick in the growth. So we'll have to see. They guided next year or next quarter for a little kind of the same. So we'll have to see what they end up doing. As far as the statement of cash flows go, the net cash provided by operating activities went up quite a bit. They did spend a little bit more on, again, their property and plant equipment, bought some debt securities, and you can see here at the bottom, proceeds from issuance of long-term debt. This is part of the debt that they had, and they also repurchased a small amount of their shares. So 898 million is what they repurchased versus pretty much 5 billion last quarter. I think it was, or not even 5 billion, 9 billion last quarter. So it's interesting to see that they're cutting back on their stock repurchases. Not really surprising given what's happened with the stock price itself, but there is that slowdown in stock repurchases. I think they had around $40 billion that they could still spend. Again, as you know, because of all the different repurchases and things that they've done and kind of just the changes that they made, part of what they've done financially is they needed to lay people off. So you can see here what part of that reconsolidation all means. So in the last 3 and 6 months, we recorded total restructuring charges of $705 million for last 3 months, $1.64 billion for the last 6 months. Under our FOA segment and respectively, and it's $75 million and $286 million under our Reality Labs segment respectively. These charges lowered our operating margin by 2 percentage points and 3 percentage points for 3 and 6 months, and our diluted EPS by 25 cents or 61 cents for 3 and 6 months. You can see here again the 3 months and what has happened. The severance and other personnel costs, it's really all those layoffs and things that they've had to do. I believe they still had half of the 10,000 people that they were laying off counted. So you may see some of this spill over into the next couple of quarters still. Part of it too was the facilities consolidation as well as some of the data center stuff. So nothing crazy. But as far as the 6 months, it is something to note because, I mean, it is, a cost. So I wouldn't be surprised to see if we see kind of hit like above 2 billion on the total for the restructuring and things that they've done. Earnings presentation, kind of the segments and what they show the market. So left side is Q2 2021. The right side is Q2 2023. You can see the last couple of quarters, what has happened. So again, advertising hasn't really gone anywhere, as far as like the quarters. You can see kind of 28, 20, 28, 32, 26, 28, 27, 31, 28, 31. So the, sales piece of it on the FOA side has been kind of picking up and going down and picking up and going down. It all depends on the cycle and where we're at in the advertising cycle as well. So again, the e-commerce and people selling stuff have gotten a lot more confident this year. So they're going to be able to advertise a little bit more. The other has picked up slightly, but it's nothing to like kind of write home about. The other thing is Reality Labs has gone up and then tumbled right back down. So you can see here on the bottom, and the reason it's all relevant is because you can see the family of apps operating income has stayed relatively above $10 billion for most quarters. But again, this Reality Labs operating loss has grown. It's going to continue growing into 2024, as I mentioned in the earnings call. So that's going to be a drag on earnings. It's going to be a drag on operating margins. It's going to be a drag on, a lot of the things that matter to us because they're spending a lot more of getting, just trying to get Reality Labs up and running. They're spending a lot and it's not really translating into sales yet. Whether or not this Quest 3 that's going to come out in September or get announced in September will generate a lot of sales is yet to be seen. So we'll have to see what ends up happening. But we're really focusing on, as far as this earnings and everything, we're focusing on the FOA and the advertising revenue because that's what matters the most. That's what's bringing in the money and that's what's bringing home the bacon. So you can see here again, Q2 2021 over to Q2 2023. And really what's of note is just the difference in quarter from last quarter to this quarter. So you can see some slight growths in every single demographic. The biggest one and the one that brings home the most money is at US and Canada. That North American region brings home a lot of cash to the business. So it's important that they do well in that business. But you can see in prior Q2s, it's not surprising to see sort of a dip in Q3. Q2 and Q4 being kind of like the highest ones. So I wouldn't be surprised if in Q3 we either see something that's slightly below Q2 or, right at Q2. So it'll be interesting to see. Family daily active people, these are some of the ways that they track their users and who's kind of logging on just to the family of apps. You at least log on to one. So this is a daily active, and they also have a monthly active and other, kind of KPIs that they keep track of. But you can see 2.76 billion is what they're at in Q2 2021. We're at 3.07. So that's half of basically the world's population touches a Meta facing app, which is kind of crazy. Like, it's actually, if you think about that from a company perspective, that is a lot of runway that they have to be able to monetize and get in front of people and actually have companies get in front of people using these apps. So it's kind of crazy to me that they're not able to monetize a little bit more on some of the other apps, but that's what they're working on currently. Family monthly active people, again, 3.51 billion to 3.88 billion. Some good growth, continued growth, and I'm happy to see that. The free cash flow reconciliation is probably one of the more important things as far as the company goes. So you can see this is kind of Q3 2022 is when all this trouble started for the company. That's when it hit the low. The free cash flow was almost negative entirely. But you can see it's ticked back up over the last couple of quarters, which we're happy to see. And it'll be interesting to see going forward what that actually looks like, because they're going to continue to spend on CapEx, but the sales and net income needs to keep up as well in order to keep that free cash flow up. But I'm happy to see, again, we're at $11 billion of free cash. That's $11 billion into the pockets of us as a business. So I'm excited to see it. They're able to generate cash on their own and continue to grow that retained earnings and that cash pile in general. Now, as far as the earnings calls go, there's some stuff that I wanted to mention in kind of what it all comes from. So this was part of, I believe, the prepared remarks, and some of it is questions and answers, and some of it is stuff that I wanted to mention here. But the AI recommended content from accounts you don't follow is now the fastest growing category of content on Facebook's feed. I don't know if you've been on Facebook's feed recently. My fiance is actually she's in the social media influencing game. So I get to see a lot of the background of what happens on Instagram, TikTok, and things like that. And her cross-posting onto Facebook drives a lot of engagement on a platform that's not able to be used the same way Instagram is, because the demographic is different. So it's interesting to see on Facebook, she can cross-post it, little to no effort on her part, but she can cross-post it, and it's getting seen by a bunch of people. People can go and follow her on Facebook and now have the opportunity to have engagement on this page that wouldn't have got engagement either way. And that drives engagement up, though, for Facebook, so they can be able to sell more products, able to sell more stuff. But it's interesting to see that they use it on Facebook as well. So they said, since introducing these recommendations, they have driven a 7% increase in overall time spent on the platform, which is a really good thing, because that means you can drive more ads. So it says this improves the experience because you can now discover things that you might not have otherwise followed or come across. Reels is a key part of the discovery engine, and Reels plays exceed 200 billion per day across Facebook and Instagram. We're seeing good progress on Reels monetization as well, with the annual revenue run rate across our apps now exceeding $10 billion, up from $3 billion last fall. And this was something when Reels first kind of came out, when they were talking about it and just kind of talking over the opportunity. This was back when Sheryl Sandberg was still at the company. It's something that she was mentioning right before she left, basically. It was this monetization. So the thing is that when you look at the sales growth and sales mix of Instagram and Facebook and things like that, a lot of the ads are going to get eaten that would have been on stories, that would have been on the kind of the feed. And the thing is that on Reels, they now have to kind of remonetize the platform using Reels. So there's going to be some cannibalization of that content, and you're going to see lower kind of ad spend because of that. But once they kind of kick it off, as you can see here, they're estimating it's going to hit over $10 billion in sales. That's going to go to the top line of the company, which is really, really, really good. And it just kind of helps create a better platform, and also competes with TikTok, which is kind of the big thing that over the last year has been the question of whether or not they can compete. And obviously, Facebook and Meta have been able to show that they can. So they said, beyond Reels, though, AI is driving results across our monetization tools through our automated ads products, which we call Meta Advantage. Almost all of our advertisers are using at least one of our AI-driven products. We've also deployed Meta Lattice, which is a new model architecture that learns to predict an ad's performance across a variety of data sets and optimization goals. We introduced an AI sandbox, a testing playground for generative AI-powered tools like automatic text variation, backgrounds generation, and image outcropping. So when it comes to Meta's AI, though, I do think that the opportunity set is there, and they're going to continue to talk about it. You're going to continue hearing about it. And the thing is, a lot of the AI is going to come into the play of what products do well, what ads do well, and also there's going to be AI ads. There's going to be AI click to messaging. There's going to be AI that drives a lot of this. So it'll be interesting. And they've been talking about AI for the last year and a half. I don't know why the market just figured out about AI in general and now is talking about it with Meta. But again, this is a kind of a buzzword that you're going to see. But I think as far as companies go, I think that Meta's kind of platforms in general, Meta platforms is going to be able to actually utilize this the most out of a lot of the other companies that are kind of talking about it. Again, not that it's not going to be useful to other companies, but some companies using it as like a buzzword rather than something that actually can be useful. Now, Mark Schulmuck asked, and I kind of want to just look at the second question, but he said, and then the second question, really impressive, obviously acceleration of growth in these kinds of core ad business. Would love to just get some color beyond the vertical contribution. What are you seeing in terms of the kind of adoption of ad plus products really driving some of that improved growth, especially what we've seen relative to the rest of the sector? Susan Lee said, and Mark, I'll take the second question that you asked around Q2 revenue acceleration. So I think that there are a couple of parts. One was around the acceleration in the core ads business. Second was on the Advantage Plus products. In terms of Q2 revenue acceleration, I'd highlight there are a few factors driving that. The first is, frankly, we're lapping a weaker demand period, including the first full quarter of the war in Ukraine, the suspension of our services in Russia. Second, we saw increased supply and improvements to ad performance, including improved Reels monetization as we continue to work down the Reels revenue headwind. And third were lower FX headwinds for us this quarter. So those were all three things that helped drive the revenue acceleration in Q2. In terms of the question about Advantage Plus, specifically, Advantage Plus is one of the multiple AI-powered ad products that we have right now in the market. With Advantage Plus specifically, we're seeing strong adoption and particular success with the e-commerce and retail verticals, and we've seen good traction with verticals like CPG, especially DTC content. We're continuing to launch features to unlock use cases for advertisers to make it easier for them to adopt Advantage Plus campaigns, measure their performance gains. So we've got a lot in the pipeline that we're excited about for both the Advantage Plus shopping campaign specifically, which were our first sort of foray into this area, but then the Advantage Plus portfolio more broadly, basically that enables us to take the same playbook of helping advertisers iterate and test very quickly and apply it to many different steps of the end-to-end ad buying experience. So the feedback and results that we've seen from the advertisers is good, and we think that's a really promising area that we're continuing to invest in, but it's one of the many ways that we're using AI to continue to sort of help make our ad systems and recommendations and ranking engines more performant to deliver better measurements and results to advertisers. So again, what we mentioned earlier about AI, what they've been doing, what they've been able to utilize, and how they've been able to utilize it. It's interesting to me, though, to see kind of a company talk about it, use it, and actually be able to show performance and things like that from it. I think that using the Advantage Plus and the ad products and letting advertisers have better, ways of being able to advertise ultimately in the end will help them given the data set that Meta Platforms has on all its users. Next set of questions is Craig Huber. 3 things really quick if I could. Your marketing sales was obviously down about 15% year to date. Maybe you can drill down on how to got it to. So the next question from Craig Huber. So I just kind of wanted to mention kind of the last question really, but really kind of what they think. And third and most important question, you accelerated revenue growth outlook for this third quarter. You did better obviously here in the second quarter. How much of that do you think is from a better macro environment from your standpoint, or is it more internally driven, the changes, improvements you guys have made on your platform? And Susan Lee said, and then the final question was around Q3 outlook and sort of how much of it was driven by better macro. And again, I think relative to, I wouldn't say there are a couple of things. One is relative to the corresponding period a year ago. We're certainly seeing an improvement in the macroeconomic landscape. So the fact that we're lapping a quarter that last year decelerated 4.5% year over year just set us up, for a better comparison. We've also seen the macro environment, improve sequentially through this year, so we're seeing some stabilization there, and in particular some of the key advertisement segments for us like online commerce and gaming. There's a currency effect that I mentioned, and then there's obviously we're continuing to consistently try to improve the performance of our ad products to deliver more conversions, etc. I think macro is a big factor. It's the first thing I mentioned, but there's still, even as we've seen the macro landscape improve, I'm well aware, as I think anyone has lived through the last 2 years there's a lot of potential for volatility. We've had sizable fluctuations in demand over that period, and so there are really a wide range of outcomes possible. And so that brings me kind of earnings call wise, that brings me to the last point of just overall, I think that the quarter was good. I think that what they reported was actually better than what I had expected. I think that's why you saw the run up in the price just a little bit on Thursday, Friday, pretty much. It's like I think it's like pretty much it ended up being like 8 or 9% move in total. But really, what I thought about the quarter is that I think they're on the right track. They definitely did a good pivot. It sounded like to me, even the things I didn't bring up here in the video, the AI generative kind of ads and things that they've been doing with that, and the auto generation that they've been using to monetize content has been doing really well. They're focusing on hiring technical talent rather than kind of middle managers and managers to manage those middle managers, and setting up a really vertical organization. They flattened it out a lot and made sure that people have access and resources and things that they need. So they're going to be hiring next year. I think they've already started hiring again. So the hiring freeze is no longer in place. They're probably not going to run up their employee count as much as they did. They are going to pay more so for technical talent. So it'll be interesting to see what ends up coming out of this kind of skill set change and what they're able to do. They did mention Threads was a big thing that I don't think I mentioned in this video yet. Threads was actually created by a very small team. It didn't take a lot of resources, according to Mark. So it's interesting to see, like, they're able to pivot something that quickly and come out with something that quickly that didn't require a lot of, internal resources and things like that to create. It'll be interesting to see what else they can do, given that they have so many people and so much brain power and everything at their company. And I think that creating an open source text language model will be interesting too, because it'll help them over the long term. So I'm curious to see what they end up doing. But with that being said, this wouldn't be a value investing video without the valuation. So with that being said, let's jump right on over to it. So as you can see here, I kind of walk through it, just let you know what I think, and then you can decide whether or not you think I'm right or wrong. So the thing is that the current outstanding shares went up slightly from what it was before, and obviously they didn't repurchase as much, so they weren't able to offset what they did put out as far as like what shares they gave to people versus the shares that they bought back. So that's one thing of note. Their current revenue for the last 12 months was $120 billion, 121 pretty much $billion. The current market cap as of Friday was $837 billion. So they're coming close to that $1 trillion mark again. The current share price is $325. The previous video, so actually let me just jump over to the Excel sheets. The previous video, I actually had, this is what I had. So I had, relatively speaking, and I actually think it probably was even lower than this, but this is kind of what I was thinking when I put this together, kind of what I ended up with. So 2%, 3%, 3.5%, 5% was what we were thinking as far as revenue growth goes. And then the profit margin on the low end, 20%, 18% for the free cash, and then high was about 30%. The thing is, again, historically, before this whole Reality Labs started happening, their profit margin was 30, 35%. So it's possible that they get back there. I think that it's probably, at least for the next 5 years, not going to happen. It's not going to go above 30%. It might not even go above 25%, to be completely honest. The drag that Reality Labs is going to have on the business will be substantial. It's going to be significant. And if they don't start turning a profit with that company or that segment of their business, and they, something else, let's say something else doesn't happen, there's no way that they get back above 30%, 35%, especially because they're making the products in-house. They're selling this product now rather than it being just a high margin business that was advertising. So that was something to note from Q1. And again, nothing crazy as far as the current revenue or anything like that. So that drives me back to Q2 2023, where I'm at. So I did raise the kind of revenue growth estimate slightly. Again, it was a lot different when I showed it. If you go back to my last video, it was a lot different. So in the last video, this is what I had. I had on the low end, the worst case scenario, the price is estimated to be anywhere from $100, maybe like $115. Let's say that. So about 50% lower from where we were back then. So that current share price making this video is $209. We're 50% up from that time. So the estimates I had was 2% to 5%, and then I kept the profit margins the same, the free cash margins the same. So my fair value at the time was 156. I didn't think it was worth 156. I thought it was probably worth closer to $200 a share, given where we were at and what the expectations were and things like that. Granted, again, the discount rate's 12.5%. So going back now to Q2 2023, I did raise those numbers just slightly. I don't think the revenue growth for the next 7 years, which is what this Excel sheet is calculating out to, I don't think that they're going to keep a 7% growth rate. I don't. I think what'll probably end up happening is in the short term, maybe give or take 1, 2, 3 years from now, it'll probably be close to 10%, if not right at the door of 10%. Granted, they're at 11% this quarter. They were estimating 12% next quarter, but I think over the next few years, I think it'll be around 10%, if not slightly lower. So 7% may be definitely on the high side. The 30% profit margin, as I mentioned earlier, is going to be like a dream if they can hit it. You can see today their current margin is 18% on the net income and 19% on the free cash flow. The current PE is 37 and the price of free cash flow is 34. That's expensive for this company. And this is all leading up to what I'm going to say at the end. So the low end of this revenue growth is, I think, $110 to $120 a share. The midpoint is around $200 a share. I think, like, personally, I think this company is worth anything between $2 to $250 a share as far as what I think is calculated and where I'm at as far as comfortability and what I think it can do and all that good stuff that goes into that. I think $200 to $250 a share is probably around fair value. Now, that being said, the current stock price as of making this video is $325. Now, I'm going to put this out a couple of days from July 28th, which is when this data is taken from. So the stock price could come down just slightly. But what I'm going to do personally, and kind of what the conclusion I made in this video, the position I have is around 15% of my portfolio. What I'm probably going to end up doing on Monday, so that's going to be July 31st, is going to be Monday. Come July 31st when the market opens, I'm probably going to cut that position in half and make it 7.5%. I've already done a haircut on this position. I'm probably going to do another on Monday or Tuesday. And the reason being, I think that relatively speaking, $325 is far above $250, which is on the high end of what I think the stock is worth today. Am I going to be wrong in the future of what this stock is worth based on this sheet? Of course. But I would rather risk not getting all the gains that I have and still being in the company and still being part of the business while not risking it being on the high end of what it probably is worth to me. So again, if it keeps running, I'll probably keep haircutting this. But as far as this company goes, I think that there will be other opportunities that do come up that I can put that money into. And that's what I'm researching right now. So I'd rather have that money on the sidelines sitting there waiting for me to deploy rather than hoping and praying that it goes up. So with that being said, thank you all for joining me today. Let me know if you think I'm wrong. Let me know if you think I'm right. I think as far as fangs go, these have all ran a lot. They're probably more expensive than they should be, but that doesn't mean it can't keep going up. And again, I'm not saying what you should or shouldn't do with the company. If you want to buy the company today, you don't have a position, go ahead. I don't really care what you do with your money. It's your money. It's your choice. So with that being said, though, I'm a value investor. I'm continuing to modify my positions, modify my risk, and make sure that I don't lose money in the portfolio, and trying to make sure that I keep my risk to a minimum if I can in a position. If I'm not sure about something, I would just sell out the position entirely and continue to do more research until I'm sure about the answer to my question. Right now, I'm pretty sure that this company is slightly overvalued, if not leaning towards more overvalued territory. So I'd rather not risk this getting revalued to what it should be and me losing out on the potential of these gains in the short term. As far as the long term, what I think will happen in this company, I think it'll keep growing. I think Mark is on the right track with FOA. I think Reality Labs is going to be a shot in the dark, and we'll have to see what ends up happening. But I hope to keep track of this company with you here on the channel, even if I'm not in it in the future for some reason. I would love to keep track of it. So with that being said, thank you all for joining me today. I hope this was an informative video, and I hope you guys got something out of it. Let me know down below below what you think about this quarter and what you think about what Mark said and Susan said. And also, Susan Lee had a good interview on CNBC, so go check that out too. It's a really informative interview. With that being said, thank you all for joining me today. Happy investing.